All right, in this video, I'm going to walk through a tax planning strategy called donor advised funds. It's around charitable contributions, but more at a high level, it's about tax planning in general. And I think that, if there's one, resolution that you want to have for 2023, it's, thinking about tax planning and kind of working with your CPA, whether it's, one time a year, once every quarter, maybe two times a year. But even if you can't find any tax planning strategies, having that conversation with your CPA, walking through all your investments, walking through your income, when it comes time to April, when you prepare your return, there's not going to be any surprises. It's one thing I see, people don't want to deal with taxes, right? It's like a fear. It's something that they push off. But if you're having these conversations throughout the year, or even like two times a year, one time a year, it's going to alleviate the stress, right? Come taxes. We see a lot of people kind of put this off. They don't want to deal with it, but it's kind of part of your own personal financial plan, right? Is to think about taxes. But again, in this video, it's donor advised funds. What is it? This is a template that we use with our clients who sign up for the tax planning service. And the key of tax planning in general is you're kind of looking at what happened last year and what happened this year, right? What changes? Did you get a new job, right? Did Ferris get a new job? Did he sell, some stocks that resulted in capital gain? And as a result of those capital gain, what the tax liability is. And you can see all of this as it happens, and you can make changes to that before the end of the year, because oftentimes once December 31st hits, you're kind of limited on what you can do, right, to help kind of reduce your tax liability. So like, for example, just say he sold some stock, in October, he's got a gain of $50,000. Well, we could tell him, hey, Ferris, we noticed that you have some losses. Do you plan on selling those losses? And that can help reduce that $50,000 of capital gain, right? And that's, if you look at our tax loss harvesting video, you can kind of learn about that tax strategy. But, these are conversations that, like I said earlier, you should have at least one time a year with your CPA at a minimum, having it two times a year, or even once a quarter, especially if you own a business, to understand what your tax liability could be. And most important is, are there ways to help kind of reduce that? So in this scenario here, we're saying that everything, Ferris, same job, didn't have any stock sales. He's got that Schedule C income. He's selling stuff on eBay. So he's got an income of $45,000. And at the end of the year here, his tax liability last year was, let's see, you can't see it in this video, but it was $35,000. Carrying everything over to this year in 2022, his tax liability decreased a little bit just because of the tax rates and everything. He's at $33,000. So now one of the tax, one advantage is, contributing to charity, right? And he's an itemizer, right? So if he were to take the standard deduction, which I wouldn't advise him, the standard deduction 2022 is $25,900 for a married filed joint couple, right? I would not recommend that, because that would be less than if he were to itemize. So with him itemizing, he's got mortgage interest, very, similar to last year, $17,000. He caps out at the state, local tax deduction of 10, right? So 10 plus 17 is 27,000. That alone is more than the standard deduction of $25,000, right? But he also contributes to charities a lot, right? And this year he's trying to figure out, okay, last year I contributed $4,700. What should I do this year? Well, there's a strategy called the donor advised fund, right? And this is something that essentially, kind of keeping very basic, where you can kind of set up a fund, and you can set this up with, Charles Schwab, with Fidelity, and you put an amount in there. Just say you put in $50,000 in this fund, okay? you can take that deduction in the year that you contributed, okay? But you don't have to use those funds to contribute to a certain charity. So you can put in $50,000 in this fund, right? And maybe 2 years from now, you can decide, you know what? I want to put $10,000 to this charitable organization. And you can do it 2 years from now. But one of the advantages is you get the benefit of creating that fund and putting the money in this year. So Ferris decides to do that, right? And he's going to create a donor advised fund of, we're going to say $20,000, right? So he's going to put this money in. It's going to be an investment, or he might transfer some of his investment assets into that fund. But again, it's going to sit in this fund. And what's nice is it's going to grow, right? Or you hope it's going to grow. And then, every year he can decide how he's going to use this money, and it grows tax free. So maybe this 20,000 he puts in now will grow to 25,000, and then he can use that 25,000 to contribute to all the charities that he wants. But the key is he puts it in now, he gets the benefit now. So in that earlier, example of, his tax liability of, it was 33,000. By doing this $20,000 contribution to the donor advised fund, now his tax liability in 2022 is 28,900. So he got to save there. Also, this gets to appreciate, and I think it's a win-win overall. So again, it's called the donor advised fund. You can transfer assets, real estate, but mostly it's kind of like financial investment assets in there. Watch it grow, right? So you transfer over Amazon stock, watch it grow, and then 2 years from now you decide, okay, I'm going to contribute to XYZ charity, assuming it's IRS approved, but he gets the deduction this year. So there's no pressure on, okay, I'm going to contribute 20,000 and I need to do it to these different charities. No, you don't need to do that. So anyways, this is the donor advised fund and just overall tax planning. I'm going to refer back to this schedule here on different other strategies and stuff, but I highly recommend that you talk to your CPA, have these conversations. You're going to relieve a lot of anxiety by having that. Thanks.